right, good morning. Your time is 6:15. Welcome back from the bedroom to the basement. Good morning, Mike Eppel. We're doing some business news here. How are you?
How you doing? I'm fine, thank you. I'm fine.
Yeah, we're everyone's just doing the best they can. Let's just put it that way.
Yeah, well, it's funny. I've been relegated to the basement for almost 2 years now. So, but that's my choice, right? It hasn't been because of anything. Triple vaxxed, and I suppose could go out, but why? It's like it's lovely down here. I'm surrounded by all of my things. It's nice and quiet. I don't have to deal with people.
You've got tractors, books. You need no more. You're good, Mike. But speaking of homes, listen.
Yes. Yep.
People are looking for the space, right? As we know, during the pandemic, everyone was looking for more. But what was out there, that's a whole other thing. How much they cost, that's a whole other level. You're following some more numbers for us.
Yeah, got the December real estate totals from the Toronto Regional Real Estate Board this morning, and this is again, the tabulation of the entirety of 2021, which, to no one's surprise, was a record breaker by pretty much every metric. 121,000 sales, which was 7.5% above the previous peak in 2016. Prices were up, as we know, and it depends on which area of the 416 and the 905 that you look at. Anywhere from 17 to 30%. And again, it's category-based, Melanie. Detached homes, of course, seeing the largest price appreciation. The condo market saw quite the bounce back last year, too. And then you look at, okay, where are we now? Well, we've got virtually nothing for sale. That's a problem, obviously. You've got people coming in, more buyers, interest rates still at record lows. And I'm reading the TRREB press release this morning from their CEO, who says, look, it is time to do something substantial for the real estate market, not Band-Aid solutions, as they call it, which is what governments have been doing for the longest time here. Buyer's tax here for foreigners and a little bit of this, that, and the other thing. Got to build something. Where, how much, got to go up, not necessarily out. You get pushback, from homeowners, neighborhoods. I mean, this is, you're looking at time for a national summit to do something about real estate, because people are in it. It's great. If you're trying to get in, good luck. And the bank of mom and dad are helping out in some cases. But the pressure on the real estate market is just going to continue here until something gives. And I don't know what that necessarily is.
But something does need to give, that's for sure. Yeah. Mike, you are calling this Wall Street's tech wreck. What do you mean?
Well, okay, here's an interesting case in point about real estate and how it all kind of ties into the financial markets, because one of the catalysts for everything is interest rate policy. And yesterday we got the minutes from the last meeting of the U.S. Federal Reserve. They get together every other month and they talk interest rates. And then we get the actual behind the closed doors discussion. And what the signal is that U.S. interest rates are going to go up this year faster and sooner than what maybe people thought. And that'll have a ripple effect through the Bank of Canada. Interest rates here are expected to go up. So does that calm things down a little bit? It's going to make home buying more expensive for mortgages. We're already seeing mortgage rates in the U.S. more so than here go up. So the stock market, it kind of went, whoa, wait a second. We have had record highs for equity prices based on low interest rates. Saw a reset yesterday. Big sell-off for Apple, Microsoft, Tesla. Amazon was down. The heavyweights that were the big movers last year pulled back substantially. NASDAQ was down 3.5%. We're staying close to a year. This morning, a little bit of stability, but this is the thing to look for here in the next couple of months, Melanie. Interest rate policy, the effect, the cause and effect on stock markets and housing.
Absolutely. All right, Mike, we have run short of time. We're going to do same thing tomorrow, same time,
all right.
same locations.
Talk then. Okay.
See you then.